Today, we want to talk about the critical checkpoints in a contract of sale that benefit both buyers and sellers. So let's get after it. A lot of buyers and sellers are interested in what contract structure looks like these days. Like, what are the most common contingencies that we're seeing occur time and time again in the contracts that are happening in the marketplace? So in the last couple of videos, we've talked about financing, we talked about inspection, in particular about the appraisal and the home inspection report, et cetera. So Chris, let's go right after that. One of the primary ones that's actually written into the base form of our local contract is the financing contingency. You can strike it, but a lot of times now we're seeing that be invoked. So what does that look like in terms of like a typical time frame? Like, how long would a financing contingency for a buyer typically run?
Well, the financing contingency in our local contract of sale is Section 3.
Yep.
And in Section 3, it outlines not only how much is getting financed, but it also tells what they're putting down, what they're going to pay balancing cash at closing.
Sure.
It also talks about what type of loan they're going to secure, the length of the loan. And basically, it's an opportunity for a buyer, a finance buyer, to say, I am getting a loan. I cannot necessarily do this purchase without the loan.
Right.
So it's a contingency. And you asked about time. In our marketplace, we tend to see a financing contingency go maybe 20 to 30 days.
Right.
And that's a long period of time. That's a long period of time to hang up a contract like that. But it's very typical, and there's a lot of processes, a lot of things that need to happen, and it's just the reality of it.
Including the appraiser's got to show up, do their report, and all that kind of stuff that we talked about. And there's all that underwriting information that needs to be gathered, et cetera. It just takes time. You want it to happen faster, but it just takes time. So sellers need to understand that. If you're going to accept a financing contingency, it's probably 20 to 30 days, typically not longer than that. And buyers want to move that forward, et cetera, but it's just sort of the timeline. Let's talk about the other one that's sort of written into Section 8 of our local contract is the inspection provision. What's a typical timeline for that home inspector we talked about before, like to get engaged into a contract? What's the timeline for that to sort of?
Sure. Well, the inspection aspect of the contract typically we'll see 7 days to maybe 10. It could be 14. Sellers love it when a buyer says, hey, I'm going to do the inspection in 2 days or something like that. That's really favorable. But longer than maybe 10 or 14 days is atypical for our marketplace.
Yeah, they typically the inspectors, it's based on real business. Are they available? The one you want, can they get over there? How long does it take to generate that report? How long does it take for the buyer to digest that report? Think about if they want to make a repair request, et cetera. So round about 7 to 14 days, something like that, et cetera. Yeah. Another one that's not typically written into the contract, but we're still seeing a fair amount of is a viewing contingency.
Oh, yeah.
People are still buying real estate virtually. They're still going FaceTime with their agent saying, I love it, but I want to be able to come into town and touch it, feel it, smell it, sense it, walk around the house and kind of get a feel for it. Any sense of timeline of what is pretty typical for that, or what are sellers typically willing to give on that leash on that?
Sure. Well, we're in a marketplace where there are a lot of inbound buyers. There are a lot of second homes and things like that. So it is not uncommon for a buyer to see some marketing online or something like that and want to engage and want to grab that property, at least have an opportunity before they book an air flight to come down. And so a lot of times a buyer might say, okay, let's negotiate the terms of the contract. I haven't seen it. I've seen a video. I've seen this or that, but give me 2 days. Give me 3 days. But the shorter, the better.
Sure.
And because you really don't, a seller's not going to want to extend that out to a week or 2 weeks or longer than that, just to have a buyer come down and walk around and say, no, that's not for me.
Well, and there is, I know you've used the term sort of an escape hatch, but typically on that one, it's typically contingent upon satisfactory viewing of the property, meaning for whatever reason the buyer isn't happy with it,
right.
They get to say it just doesn't work for me. And that's understandable, but a seller typically isn't going to want to pull their house off the market for a long time to make that happen.
Sure.
And yet, to your point, the buyer might need that in order for them to be confident to move forward in earnest about buying the house.
Of course.
Let's take that a step back. Another one, a little bit even less common, but we're still seeing more and more of it, is the home to sell contingency. I want to buy your house, but I've got to unload the one I currently have, or maybe I need it to close. Can we talk a little bit about what that looks like?
Yeah, this is something that we are seeing more. And as markets soften across the country, we're going to continue to see this more. So it's something that sellers should not just discount and say, I'm not going to take that. I mean, let's look at it. But I think it's really important, if a buyer is going to introduce a home sale contingency, it's really important for the agents to really get involved. And so when that comes to us with one of our listings, what we'll ask for is maybe we'll ask for the contract of sale on the other property, or we'll ask, if it's not under contract, we'll ask for the listing. It's on us to get on the phone as a professional to a professional and call the other agent in the other state, and say, are you getting activity? Give me how are you priced? What are your expectations? What's your game plan if it doesn't sell in a month? Get some sort of understanding about the viability of that transaction actually happening.
And you mentioned a month. I'm taking a seller sitting there thinking, my gosh, I got to take my house off the market for a month, only to wait and see if these guys can actually sell that property. You can understand why not everybody's usually a fan of that. So it's circumstantial, right? But the situation might be, especially I like the one where, hey, our house is already under contract.
Yeah, like
it closes in 10 days.
That's the best.
It's contingent on us. We just need to get to the finish line on that one. And then we're going to turn around and write a check and close on your house.
That's the best. And sometimes we've also seen buyers that are ultra confident that their transaction is going to take place. They still want to look good for the seller. So they might say, how about we do this? How about we have a non-refundable deposit or something? If for some reason we can't sell our house, we'll forego this amount of money. And that kind of equalizes it a little bit.
All good contracts are a give and take, right? So if you're trying to take the opportunity to have some protection, you might need to give something back to the other side to make that palatable.
Sure.
So those are kind of the primary four ones. And then in our contract, we sort of have this other terms where people might write in other contingencies.
Absolutely.
Anything come to light on that we've seen?
Well, we have in our contract to sale is Section 6, but it's basically an opportunity. If a buyer has something, and it could, whatever it is, it could be an appraisal contingency, it could be making sure they can get insurance, making sure they could, whatever. Making sure they can have their pet there.
Yeah, will a pool fit?
All of those sort of things, those can be written in.
Yeah.
So a buyer can write in some provisions that allow for an opportunity. It's a critical point of the contract where they can get out without breach of contract.
Yeah, right.
And they can get out safely. And a seller understands kind of what the buyer needs to do in order to move forward with the sale. So everybody's on the same playing field.
So let's talk about, so there's that critical checkpoint, right? We'll call it, like you get to that point, because it doesn't necessarily mean that if for some reason they don't meet that contingency, they might say, well, that's okay. I still want to buy the house.
That's happened.
Our house, the closing didn't happen, but we still want to move forward and buy the house. So it's not necessarily a reason to get out of it, but it is a protection there. Talking about protection for sellers then, just one last point is on a few of these, it could be a viewing contingency, it could be an architectural or pool contingency, it could be a home to sell contingency, typically not the financing or the inspection contingency. What can a seller do to sort of keep their house on the market or visibly available so they don't feel like all of a sudden they just hung up to dry while they're waiting for this to happen? There's a methodology in our local MLS.
There is, and every MLS is going to be a little bit different with the terminology or whatnot. Sometimes you'll see it as contingent status.
Right.
Locally, we use something called active under contract, which is what we decided to use. So anyway, so we're active under contract. So when you're active under contract and you're not technically just under contract, same as contingent. Then when you look at Zillow or something like that, it might say up at the top, accepting backup offers or something to that effect. Or it might still show as active. You just don't know. Every third party is different. But it's an opportunity to let other buyers in the marketplace, other agents in the marketplace know, hey, there is a critical junction here. there's something that has yet to be satisfied. And if it's not satisfied within a stated amount of time, this property is going to be available again. So even if you're interested in this property, it's a great idea to just still go and see it, because you might want to make a backup offer, or you might want to be ready to pounce if it comes back on the market.
Buyer agent, pick up the phone, call the listing agent, say, what's going on with that property? Are you open to backup offers? What's the nature of this contingency? Maybe even a feeler, like what's the probability of this contingency getting satisfied or the deal falling apart? Those conversations happen a lot of times behind the scenes to give both parties kind of an idea of how to move forward.
Contingencies basically just shift risk.
Yeah.
So basically, the more contingencies a buyer has, the less risk the buyer has in the contract, but the less appealing the contract might look to the seller.
And I think that's a great point to kind of close on is, buyers, if you're thinking about making an offer, but something's important to you, whatever that is, don't be afraid to make that offer and write it into the contract, whether it's one of these basic ones or something exceptional that's specific to you. Don't be afraid, because you might find a seller who's interested in saying, you know what, I'll do it. I'll take that bet. Like I'll give you a little bit of time. I might not give you 6 months to sell your house, but I might give you a little bit of time to kind of do your due diligence and solve that to your satisfaction, because it's all about making deals. All right, guys, there you have it. That's what's happening with regard to our market. As always, guys, we appreciate you watching us on YouTube. Please follow us, tell your friends about us, and we'll talk to you on the next video.